GM, good morning. Welcome to the Milk Road Show, the daily crypto show that's your crypto compass that points you straight to success. I'm your host, Jay Hamilton, and today we're talking about how do you buy crypto without buying crypto, and why the heck would you do that? There's actually several good reasons for why you would do that. Here to join us today is Tyler D. Before we jump into today's show, I've got really exciting news for you. Today, we are launching a 2-week raffle with amazing prizes for anyone who subscribes to our YouTube channel. We are giving away our crypto investing masterclass worth $500, a 1-year subscription to Milk Road Pro, a 1-month subscription to Milk Road Pro, and a mystery box. All you have to do to participate and enter is subscribe to our YouTube channel. You'll earn a bonus point as well if you post a screenshot showing that you've subscribed on Twitter or on Instagram. Just make sure you tag at Milk Road Daily. The winners will be announced on September 4th. You have until the end of the month, August 31st, to enter. So make sure you subscribe now if you're not already subscribed to this YouTube channel, and you could win some amazing prizes. Thanks for your support and good luck. Now, Ty, before we jump in, let's just talk for a minute about why you would buy crypto not on chain. When I think there's going to be some maxes out there listening to this that are going to be like, what, the only way to buy crypto is to buy it on chain. But there is many ways, and I'm sure you listening to this episode know that there's many ways, but there's actually many reasons why you might invest in crypto not on chain. And also, there's a lot of great beta plays to crypto that we're going to talk about today. And we're going to do this in a sort of a risk curve way. So we're going to start with we've got about 5 options that we're going to go through today. And we're going to start with the least risky going to the most risky. So depending upon where you fall on the risk curve, you can think about these yourselves. And I want to be clear that those listening to the show might say, oh, well, like, is this show for my mom or for the person who doesn't know how to use a wallet and doesn't want to buy crypto on chain? It's like, no, this show is actually for everybody, because as I said, there's a lot of reasons and advantages to buying crypto through the TradFi system, or to just diversifying your investments and not having all your bags in one place. We talk a lot about diversification. We've talked about meme coins in the past with you, Tyler. We've talked about altcoins last week. And this week, we're going a little bit more TradFi. We're going a little bit more traditional. So first, I just want to talk about the advantages. What are the advantages in buying crypto not on chain? I'd say there's 3 main advantages. One is there's massive tax advantages, depending upon what country you're in, but mostly there's tax advantages. There's regulatory advantages just because of the regulatory safety. And there's also convenience. It is, let's be straight, it's way easier to do this than it is to do the on-chain way.
Yeah, convenience is probably the biggest one for me. And you talked about products for your mom, and to be honest, I don't want to set my mom up with a ledger and have her write down her seed phrase on 2 different note cards and keep them in 2 different spots of her house, or keep one in a PO box at the bank, right? Just in case her house gets invaded, or invades the wrong, but it gets robbed or whatever. But this is where there are advantages to custody products, and self-custody is great. It is a core fundamental use case of crypto. Definitely not denying that. But when you think about crypto from an investment lens, which I think we're doing on this show, there certainly are advantages to going through custody market makers and institutions to help you along with that. And I think a big one for me is estate planning. So I have a wife and 2 kids. I keep pretty good records of all of my crypto, but to be honest, something happened to me. My wife probably couldn't recover 100%. She could probably recover 90 to 95%. She's not recovering at all. And I think as you look to build bigger investments in these assets, you have to think about things like that. And there are advantages just to holding it, your Bitcoin with ETFs, and you can give access to your financial advisor, and then you can get to a place where you have a one-stop shop where your stocks, your crypto is all in one place. So I'm a realist. like I see the world like realistically. Like I see the advantages of that and why people would do it.
This is a good point on the estate planning. I hadn't really thought about that. Like, you're totally right. If I got hit by a bus, my wife would she would be able to get some of it, but she would not be able to get all of it. And I certainly have not explained to her. I feel like I need to write a document of how, just in case, how she could get it all and where all seed phrases are hidden and how she can use them. The tax reason is the main reason for me. I'm in Canada and we have what's called a tax-free savings account. I think there is similar versions of this in most countries around the world where you can invest in tax-free ways, and you can't buy crypto on chain in a tax-free savings account, whereas you can buy the ETFs. And I'll be straight, for me, I have bought more of the ETFs over the last year than I've bought other crypto assets, mainly because I consolidated most of my assets into the majors. Canada also has had an Ethereum ETF for longer, so we've been able to buy that much longer than the rest of the world. But if you can avoid capital gains tax, that's a pretty big deal if you have that option. So definitely a good option there.
It also keeps you from spending your crypto on chain, which is something I was very guilty of during the NFT run. I bought all this ETH and then I ended up spending it all on NFTs, right? So this is a way to potentially divide up the portfolio. Like, this is the funds I'm definitely not going to touch because I can't touch them. And like you mentioned, the regulatory thing, that also is big. Like we love Coinbase, big Coinbase fans, but you still see the stories of folks who their banks deny them, or their Coinbase accounts get locked for a month. And it's just, there's less red tape in buying some of these other products that we're going to talk about on today's show.
Okay, so let me run through the products that we're going to talk about, and then we'll dive into each one. We're going to talk about the ETFs. Obviously, no surprise there. Those are the least risky and the most accessible. Then we're going to talk about a few beta plays with Coinbase and Circle going public at some point soon. We're going to talk about MicroStrategy, and then we're going to finish with a more risky opportunity, which is a new MicroStrategy Levered ETF that actually just launched yesterday, I believe, and is already doing very well and breaking records. Apparently, we'll dive into that at the end. So make sure you stick around all the way to the end to learn about that opportunity to get some more risky investments, but do it in a TradFi way. Let's start with the ETFs, probably the least exciting, but the most accessible. What are your thoughts on the ETFs that are available right now?
The ETFs are great. You already talked about some of the reasons why someone would get involved in these, and effectively what they are, if folks aren't familiar, is these different institutions like BlackRock, like Fidelity, like ARK. They've stood up these ETF products, which effectively track the price of Bitcoin, but they sell shares and they have their own share prices that are unique and not tied specifically to the $58,355 price tag of Bitcoin on Friday the 16th. So that's a little bit of level setting. We've seen the Bitcoin ETFs have some tremendous success. So they launched in mid-January 2024, 17 billion in inflows already in 8 months. I think that has greatly surpassed anyone's expectations for where these would go. I think, again, BlackRock has been leading the way. So the institutions are piling these up, and this is before we really have even seen the ETF exposure to individuals' 401ks. And I think that's going to be the next big arm that is going to drive this all forward. And the ETFs are making that type of investment more possible. And we talked about Bitcoin. It seems like all the crypto majors are going to get them. So we just had the ETH ETFs launch less than a month ago, and we can show the inflows. The inflows aren't quite as great, so we're still at a net negative 400 million in outflows. That's largely because this grayscale ETH trade is converging, and that's a longer story for a different show. But grayscale, they're running out of ETH. But I think the highlight here is BlackRock is almost at $1 billion in buy action. So they're at 967 million of the ETH ETF that they've already accumulated. And the word on the street is the Solana ETF is probably going to be next. It's not coming anytime soon. I wouldn't bank on it happening in 2024. I think perhaps early 2025 at the earliest. And again, this isn't concrete, but it seems like where we're going is we're going to have ETFs for all the major cryptocurrencies. I think perhaps even more interesting is we may start seeing baskets where you can get that diversified basket of 60% Bitcoin, 30% ETH, 10% Solana, or whatever that balance may be. And I think we're just going to have more and more options here in the near future.
Yeah, I think the other exciting things about these ETFs right now is the fees on them are so low because everybody's competing and everybody wants to get the biggest slice of the pie right now. So not only are these ETFs very easy to buy through any of your typical banking systems, but also your fees are so low on them right now that it actually makes it very attractive to buy there as well. And as you said, we're most likely getting, I'm going to bet we're going to get a Solana ETF in 2025, especially if we have a change in political party and Gary Gensler is out of the SEC. Then I think it probably could come earlier in 2025. If we don't get the change, then maybe it comes like mid to late 2025. But it's a when, not an if at this point. I think the first date that it's in early February is when they have to make a decision on, there's 1 or 2 Solana ETFs applications that have been filed, and that's the final date that they have to make their decision. So we will have some sort of a decision by them, but they don't, just because they don't approve it then doesn't mean they can never approve it. So yeah, definitely that is coming as well. Okay, let's keep going down the risk curve a little bit more. What are the other ways that you can invest in crypto without buying crypto on chain?
We already name dropped it, but Coinbase stock. Jay, we've talked about Coinbase stock on this pod, I think maybe a few weeks back. But when I think about Coinbase stock, I kind of think about it as a slightly leveraged bet on crypto. And you get that extra leverage because of the additional income upside of Coinbase. So Coinbase generates income from its base operations as well as its core Coinbase operation. They make money on transaction fees as a central exchange. They make money on their premium services like Coinbase Pro and their institutional custody services. They are the institutional custodian of a lot of the ETFs that we just talked about, and they make a fee on all of those transactions as well and those partnerships. That's the Coinbase side. Now on Base, their new L2, which the Milk Road team has been talking about quite a bit, especially on X, and rightfully so. Like, they're growing tremendously in popularity. We take a look at the fees. I mean, they're chugging along in fees. They're still making 100,000 to 150,000 some days in daily fees off of their L2, and all signs point to them continuing along that trajectory. And that's what, $3 million, $4 million a month now generated from Base. So they're going to continue to find ways to bet on that and drive more action to Base. And then of course they also hold crypto on their balance sheet. So that's where this also kind of comes back to being a slightly levered bet on crypto. And I think you showed the chart of how Coinbase compares to Bitcoin, and it is, the data has shown that, right? It is a slightly.
It is outperforming Bitcoin in the last 12 months. It's been on quite a rip. I think if you're listening to this and you believe in the future of crypto, you got to have Coinbase in your portfolio. Like, this is not financial advice, do your own research and all that. But the nice thing about owning Coinbase is you don't have to know which blockchain is going to win in the end. And that is the big challenge that we all have right now is, is Ethereum going to win? Is Solana going to win? I think if you've listened to us, you know that we believe that there's enough space for both of them to win and they will both do well in the long term. But it is difficult when there is tens of thousands of tokens. I mean, there's millions of tokens if you include all the shitty ones, but like tens of thousands of like legitimate ones. Like, how do you know which of those you're going to invest in, right? It's so important to actually keep your investments rather narrow and have a pretty small basket so that you can manage it. And Coinbase is just one that is so attractive because you don't need to know which one's going to win. You just need to believe that crypto is going to win. And obviously, as you said, Coinbase is so attractive because of Base too. Like, it's just incredible what they're doing over there. Speaking of Coinbase, they also are owners of Circle, which is currently still a private company, but is likely going public. I don't know if you know when they're going public, Tyler, but that's another one of our plays here. What are your thoughts on Circle as an investment?
Yeah, so if folks aren't familiar with Circle, they make the USDC stablecoin, which is the second largest stablecoin by market cap. It's at a $34 billion market cap here in August 2024. That is second behind Tether. Tether runs USDT, which is 116 billion. So they're about, that's 30% roughly of Tether's market cap. Where this is interesting is Tether, the market leader, has made $5 billion in revenue in 2024 so far. Circle, the rumors are they're going to IPO at $5 billion. And right now, certainly they are behind Tether. And Tether invests their reserves a little bit differently than Circle does. Circle is more regulated, which actually gives Circle perhaps some upside in those regulated markets, because Tether, a lot of folks don't think they could pass an audit. Again, a story for a longer pod. But Circle, looking to IPO this year, we see the upside in these stable coin providers, and they are some of the best businesses in crypto. I think Tether has less than 100 employees, and they're making $5 billion in 6 months.
It's just
it's
crazy.
It's some of the best companies in the world.
Like, is it the most profitable company in the world?
Probably per employee, yes. I think it has to be.
Like, that is just insane. And to think that you can get a piece of that when Circle goes public. As we said, we don't know when that's going to happen. They've been teasing it for a while, likely this year. So yeah, I think I'm definitely going to be getting on that train for sure, because it seems like a no-brainer. And as we said, it's like everybody is so obsessed with crypto changing the world in like new ways that we're all fading the most obvious use case, which is stable coins. Like, it's right in front of us. It's working. It's growing tremendously. If you're in a developing country, I mean, we've done multiple podcasts about stablecoin use, about the increase in use around the world. And it's not going to slow down. It is only going to increase. Like, I think legitimately our kids, Tyler, like both you and I have young kids, and there's a good chance that they grew up in a world where they're like, all they know is stable coins. They don't even know cash or know typical currencies the way that we grew up with that. I think that they will be so native to it, and it'll be so easy for them to just send money to anybody or pay for it, anything at any store around the world, just using stable coins. So yeah, it's so obvious.
USDC coming to iPhones in the near future with this new Apple iOS 18 release. We saw Circle CEO Jeremy Allaire talking about that. Again, we don't need to go down that rabbit hole, but stable coins, they are coming. This is going to be an IPO to watch. I'll be definitely taking a serious look at it when we get more information about when that's coming out.
Okay, as we go further down the risk curve, we got to talk about our boy Michael Saylor and MicroStrategy. How do you feel about MicroStrategy?
Well, I'm wearing my Bitcoin propaganda hat. That was any tell. I love Michael Saylor. I've been calling him Big Mike. I'm just going to stick with that, Big Mike. So his company, MicroStrategy, and it's a business intelligence platform that uses AI tech to help users find information quickly and easily. All right, that's what the company used to do, but now they've effectively become known as the largest publicly traded company, which holds Bitcoin. They were made famous when Michael Saylor started aggressively putting Bitcoin on their balance sheet, I believe back in 2020, and they have a lot. They've got roughly 226,500 Bitcoin worth $13.2 billion in their latest report. The company itself only made about $111 million in revenue in this last quarter, $80 million gross profit. It actually operated at a slight loss. But the reason of the stocks, MicroStrategy's stock success has certainly been tied to Bitcoin and how they accumulate it. So not only do they buy it, they effectively lever up on Bitcoin by using convertible debt in the company to continue buying more. So whenever you see the headlines, Michael Saylor wants to buy another 250 million or 500 million, they're doing it by issuing this convertible debt. And I actually took a look at the recent performance of MicroStrategy stock compared to Bitcoin. So year to date, Bitcoin's up 32%, MicroStrategy's up 92%. On the 1 year time horizon, Bitcoin's up 100% on the year, tremendous. MicroStrategy's up 250%. And then on the 2 year, Bitcoin's up 180%, MicroStrategy's up 360%. So it's doubling or tripling the performance of Bitcoin. So I think by all definitions, it has been a high performing beta, at least over the last few years. And I gave the recap from Nashville. There are no reasons to think this man is going to slow down in his accumulation of Bitcoin. He gave us his price targets. His base case is 280 trillion by 2045, and 1 quadrillion is his bull case by 2045. So I don't think he's going to slow down anytime soon. It's a very interesting beta play. And if we really want to get out there, Jay, we can go into the next play even further out on the risk curve. And that is the news out of Defiance. So Defiance launched a new ETF. It's called MSTX. It gives investors access to leveraged MicroStrategy stock. So this ETF, it tracks the stock price of MicroStrategy. Then they use debt to amplify the position. They aim for 175% exposure to the stock. So you're getting about 1.75x MicroStrategy stock. We just talked through, I just gave the returns of MicroStrategy compared to Bitcoin. And now you're getting a new product that's going to multiply those potentially by 1.75x. This just launched yesterday. We've already seen some pretty strong demand for it in the market, $22 million in volume in the first day. I believe that is a record, a day one record for a leveraged ETF product. And we saw some impact on the MicroStrategy stock as well tied to that launch. This is one that I'm very interested in. I live a little further on the risk curve, so this is one I'm taking a hard look at.
The thing that really stands out to me about all of these options that I think that a lot of us in this space miss is just how many products are being developed right now in TradFi to get exposure to crypto. And what that means is that there is hundreds of thousands of financial advisors around the world who are currently learning about how to sell these products to their clients. And they're learning about Ethereum. And they probably never heard about Ethereum before a few months ago. And then the ETF got approved and their boss was like, yeah, I think we might actually start to sell this. Like, let's go figure it out. And that is the tipping point of education to the masses. But the thing is, I think everybody here needs to don't fade all these products. Like, go take a look at them yourself as well and take advantage, as we said, of the access you have to these in a non-crypto way. And, don't hate on your buddy who maybe is buying crypto through TradFi rails. Hey guys, it's okay to do that too. We all need diversification and we need to be smart with how we manage this.
Yeah, I think spot on. I think that's a great way to sum it up. Everyone has their own reasons. Everyone's in their own different familial situations. Mm-hmm. And now we just have more products than ever to make it happen. So it's exciting times. And we're just going to have more this time next year.
And we always have Tyler D, our Bitcoin propagandist, to come on the show and tell you to buy more Bitcoin. However you want to buy it, just make sure you're buying it. Thanks so much, everybody, for listening in today. If you like this show, if you like the content, please do me a favor. Give us a like, give us a review, and make sure you subscribe because, as I said early on the show, right now, we're doing a raffle. If you subscribe by the end of the month, you'll be entered in the raffle with so many prizes that you could win. And of course, if you subscribe, you're going to stay up to date on crypto and the latest news. Remember, none of this is financial advice. Investing in crypto, investing in TradFi, investing period is risky, and you should only invest what you can afford to lose. Thanks for listening in, everybody. Have a wicked awesome day.